Good morning, traders. TG Watkins here. It is October 24th, and this is your Daily 5. Now, a little bit of a special announcement. This is right around the corner. We have the Money Show coming up. I'm going to be speaking there on Monday, October 30th, and then we also have a simpler trading board meeting, board questionnaire thing on Tuesday that we're going to be there for. So we've got the dream team out there. And then for any of you who are also part of Simpler Trading, we have our Simpler Trading Summit going on also. So yeah, we got a lot of activity going on this weekend. Hope to see some of you guys there. And if not there, it looks like they were having a flash sale in case you want to get any good deals in the Money Show to show up either in person or virtually. All right, so just want to make sure you guys all knew about that since it is right around the corner. Very excited about it. All right, and then as a little bit of a teaser for what I'm going to be talking about on that Monday during my 45-minute presentation, I just wanted to kind of throw out some context out there. And I know that this market is still very weak. It is very challenging. We definitely don't have easy trends, but we have kind of seen things like this before. And one of the things I'm just going to point out is 2008 and 2000, and even I was looking back at 1987 since we just had the anniversary of 1987 when the Dow dropped 20%. You know, when the 50 crossed over the 200, that did at least mark the beginning of a bull market for 2008, and same thing with 2000. Again, not saying that we're totally going to be going up. I mean, things can change, but I just kind of want to put context out there and say, hey, you know, this is something we should be aware of. And look at what happened in 2023. We also had the cross of the 50 and the 200. And I know that basically, you know, I was able to call the top here at the end of July. And then it's been pretty much, what, almost 3 months now that the market has been pulling back. We've had a couple bounces, couple waves. And yeah, it's feeling really, really rough. And it's been a long time. I mean, almost 3 months that this thing has been pulling back. But where are we? Well, the 50 is still over the 200. So technically, we are still bullish on this time frame looking at this. You know, we haven't had the 50 cross below the 200 yet. So yeah, you know, that's one argument to make. And the other thing is we are right here at the 200. Now, we need to see if this is going to hold. We don't know yet. As I said, I know it's still pretty rough out there, but we do have a lot of the internals really showing that we are kind of oversold. So I do keep looking for some bullish areas, even if it's just a wave. You know, you can trade a wave here and a wave here, which we have been. And back here, there were some really big waves to the upside that you don't want to miss. So even in a bear market, and even a market like this, there are still opportunities. And that's what I'm trying to call attention to, is there are opportunities, and we may be getting one right around here. But just to kind of also put this in context, if you look back at after 2008, you know, after the 2008 bear market and we got into this bull market, look at some of the big corrections and how deep these were. The 50 did actually cross below the 200 here and here. Okay, so both times we got the 50 below the 200. These were deep corrections. But what happened? You know, they were still technically in a bull market, and things were moving up. But yeah, I'm sure it felt really rough and really bad in through there. And then look at 2000. After 2000, we also had the 50 just barely cross below the 200 there, and also just dip below the 200 there as well. And look at how long these corrections were. That's very, very long. And then we had another dip and another dip and another dip. All along, you could argue that this was a bull market. So there are times and periods in, you know, I'll call it a bull market, where it seems pretty rough, and it can be for prolonged periods of time. Now, just keep in mind, we do have a lot of black swans out there. We've got a lot of conflict in the world going on. And so this might be a period of time where the market is very weak and very calm, and we just need to respect that. But I just thought it was interesting to put a little context out there. All right, and so one thing we can look at as far as those waves, this is the number of stocks over their 20-day SMA and over their 50-day SMA. And we can see, at least with the 20-day, that pretty much every time it gets down here into an extreme oversold range, we do get a bit of a bounce and a bottom, and we are right there today. So I wanted to kind of just point that out and see if you can kind of look at breadth. You know, we are at an area where the market should tend to bounce, and we'll have to see if it can actually do that. We are and also at a double bottom right here. We just actually had an undercut on Monday, and then we kind of moved up. The other thing, just kind of note, the 50-day SMA does the same thing. It's a little bit stronger, so when it's down this far, you know, the market is worse. But look what it just did. It might have actually put in a higher low. The market made a lower low. The 50-day breadth made a higher low. Something to note, just something to be aware of as far as these waves that we try to trade. And then if we come over here to the semis, and now this could be the NASDAQ, it could be, these are the semis, it could be kind of the SPY, not the IWM, but the SPY to a lesser extent, the semis and the NASDAQ are all kind of looking similar. And what you'll notice is, notice this channel that they've been doing. It's pretty good as far as that channel, if I can just draw straighter lines. But look at that. And we are now here at the lower part of the channel. So all I'm kind of saying is, careful about the waves. Here's sell, here's where you buy, here's where you sell, here's where you buy, here's where you sell, and well, what are we doing here? Well, it might be an area to buy. And as we look at this, what is the MOXY indicator doing? Every time that we get a low, we get a higher low on the MOXY indicator. So at some point, this might actually start to turn around. So keep an eye out that. I would be careful around here about being overly bearish, all right? And you can even see here is that slight undercut. We had an undercut and then it got snapped right back up, okay? Now compared to this, yes, that was further down, but again, it did snap back, okay? We're going to talk about this channel in through here. And if we also take this, we can look and say, hey, we're right there on the daily 200. Might be an area for price to bounce at. And then if we come over here and we look at the bigger picture, again, this kind of goes back to that context that I was showing you for 2000 and 2008 versus currently. Yeah, okay, semis had a double top. Again, if I could draw a straight line, there you go, had a double top. The S&P came up and kind of reached its previous high area. Yeah, a lot of things have pulled back. So is this a double top, or is this a cup with handle with a declining handle? If you guys have read William O'Neill's book, How to Trade Stocks and all that stuff, he said that a declining handle was actually stronger than either a sideways or a rising handle. So here you go. There's the argument that we could be seeing a cup with a declining handle, and the NASDAQ is doing the same thing. And again, if we kind of look at this in context, yeah, it's been pretty brutal as far as this pullback has been. I mean, almost 3 months. But what is it doing? It's really only pulling back to an uptrending monthly 10. And it's really only pulling back to an uptrending weekly 50. So it could actually just be coming back down to, to gravity, to Earth, as far as finding some support. So I would be careful on the short side, mostly because if you talk about the waves, we're at the low end of the wave. You can see that here. And we might be good for a bounce. Now, will that bounce continue? Well, we're not entirely sure. That's what we're going to have to prove by looking at the internals, looking at breadth, and seeing how things go. I'll also note that the put-call ratio is been very, very high and has been staying pretty high. So it doesn't tend to stay up there for too long, and it's been up there for a while. All right, then the last chart that I'm going to show you guys, this is the TNX. We all know this is the bonds, and this is pretty much what has been driving the bad news for the markets. The interest rates have been going up, higher for longer, raising interest rates, all that kind of stuff. The only thing I'm going to be pointing out here, and this is a bit of a fuzzy picture, so I'm not saying exactly right here, right now, this is something context, is yeah, look at this last move that we had. This is part of why that the market has been pulling back for 3 months. It's been tough. The market does not like rising rates. However, if you look at the context of where we are, notice when price kind of pulls away from there and gets outside that third ATR, it gets a little extended third ATR, it gets extended third ATR. Where are we today? We're kind of in a similar area, right? So again, this is a big boat. That's a big ship that needs to turn. Same thing with the market. I'm not saying, hey, today's the day, but if you kind of look at this, you're like, maybe this is reaching an area where it would tend to be considered extreme, and maybe it would starting to shift the other direction. So if we just kind of say, which way do we really want to be leaning? Do we want to be really leaning super short right now, or do we kind of want to be looking for opportunities? Like the phrase goes that you want to be greedy when others are fearful and fearful when others are greedy. So we want to look at that and say, where are we at in this whole picture today? Okay. All right. Well, thanks again, everybody. This was your Daily 5. My name is T.G. Watkins, and if you guys want to find more information about me, you can come over here to any of those links. Also Twitter, I guess X now, on Instagram, on Facebook, and then remember we've got the Money Show coming up, so it's going to be really fun to see you guys out there. Please come say hi if you see me out there, and maybe tell me your screen name. That might be the easiest way for us to get to know each other. All right, guys, take care, and we'll see you at the next one.